Welcome to the Tesla Beat podcast number 50, the 50. I mean, I feel like we're starting to hit big numbers here, the 50th. So, big week. I would say probably a lot of the bears were out this week just prepping for this Tesla earnings and hoping the demise of Tesla would go to zero, and I think the complete opposite happened. Tesla, I would say I was really impressed with the letterhead or the investment deck by the IR at Tesla Investor Relations. They did an amazing job with that deck. Probably, I would say they're one of my favorite ones in the past several years. So they knew what they were walking into and they knocked it out of the park. So we're gonna get into all of that, and we have a normal special guest, Hans. What's going on?
Hey, excited to be here. Had a fun week this week.
Yeah, I know you guys were always busy. The good and bad of this podcast is it's, obviously every week. So we always get either the benefit of all these crazy pricing changes happening in the week, or we get the benefit of all of the knowledge that you have been speaking to throughout the week to put into this podcast. So I'm glad.
Soaked up knowledge, the soaked up knowledge.
Yeah. Be your off the cusp wisdom that you had to just spill when you heard the earnings, but this is more of like, hey, the dust is settled, you've chewed on the meat a little bit, and what are your thoughts? But before we get into all that, just to kind of highlight Tesla stock, it was at about 150 last week, on the day of after the Tesla earnings. I believe it was it popped 14%, so it has come back in pretty strong after the earnings call. So it was nice to see that pop happen. But as we know, let's just go off. I think let me just highlight real quick, some of the things that not necessarily big highlights, but let me just hit some of the top line numbers specifically that were actually called out in the deck, specifically like revenue. Revenue was 21.3 billion on the quarter, negative 9% year over year. The adjusted EBITDA was 3.4 million, or negative 21% year over year. And the other call out too is the net cash provided by operating activities was about 242 million versus the previous quarters were 2 to 4 billion per quarter. So their margins have taken a hit, or at least their cash that they're bringing in has taken a hit. But as we get further into this, let's just go into, so those are just some of the top line numbers. Clearly I need to fix my camera, but let's just get into like, what were your guys' expectations, and how did you guys come out of the earnings call, and what were your thoughts? So who would like to kick us off?
I know that I know these.
Yo, what are you in right now?
Oh, this office.
What is that?
This is a Cybertruck. I am a Cybertruck owner.
Congrats,
so
man!
I'm in
it's been a minute.
Yeah, it's been a while coming, man. No, but what the crazy thing is about the earnings call, right? Is I immediately liked it, like more so than any of the earnings call, because like you said, it's like they knew what to say about everything that was coming at them, like Eminem in that rap battle. It's like, oh, you guys are gonna probably say this, and so we're just gonna like go after that like right away. Like they just knocked it out of the park. I mean, for me as a layperson, as just a simple investor, I was really impressed. I was like, holy cow! And even Elon, he wasn't too Elon. I don't know a better way to put it. He's like, no, seriously, no, we're gonna do this, and we're gonna beat that, and we're gonna do this. And he was just like laser focused, it seemed. But I don't know. What do you guys think?
I'll start. There's a number of things that come to mind. First of all, Tesla definitely did answer kind of a lot of the questions or concerns, I think, coming into the call, and they really got into the short term, medium term, and long term issues, and it was probably more revealed from a product perspective than they've done on any call before. And I think it was great that John kind of started with like, here are the numbers, because there was cause for concern coming into the call, obviously, because revenues were light versus expectations, EPS was light versus expectations, and there was more cash burned. But then they actually went into the causes, the issues, and they said, well, this is what we're doing to transform, kind of in the short, medium, and long term. And they answered a lot of the questions of like what happened in Q1, what does stranded supply look like, and what does it mean? By the way, there's a big connection to the cash side of it. When you've got stranded, finished goods, and you've got the unmatched material sets that would feed them, that would be in the four walls inventory of the factory, that will show up in balance sheet and affect the cash position of the company. But they basically say like, look, we're investing for the future, but this is what the future actually looks like. And before the call, there was obviously the 8.8 Robotaxi unveil announced, so things were kind of building up to it. And then there was a bunch of FUD leading up into the call about what's going on with the product portfolio and roadmap. That took the stock down, probably from the 175 to 180 range down to 140 actually. And so they clarified what they're doing. And I think they actually exceeded expectations with, the conversation of like, look, we're going to de-risk the next platform by pulling some of those new modules out that take the cost structure down. So in an unboxed assembly process, those modules feed the unboxed process, but you could still assemble some of these things in a serial manner in the existing lines. There may need to be some retooling, but pretty manageable. So they're going to get extended life out of the 3 and Y. So if you're a finance accounting nerd, you know that. If you're a supply chain nerd, you're going to get a really good COGS decline over the next several quarters, as you're going to be able to depreciate that CapEx. So they kind of had something for everyone on the call. They said Q2 is going to be better than Q1. And they said that the year is going to be better than the prior year, and that they're going for big time growth in the following year with these new models, and then ramping the next generation platform. And then on top, they sprinkled, Optimus working in a factory later this year, and potentially in production the following year. So you had a mix of, you had a miss, but then you had them explain, what happened. And then you had them really kind of connecting the dots between where we are today and that Robotaxi future. And I think that's what was missing leading up into the call. And that was the concern of like, are we just going to get, non-answers? And the final thing I'll say is they connected on that call. Tesla does all the hard work, the 89 days leading up into that call. And the 90th day, they have that call. And all the hard work is being done. If you study the company, they're actually doing really amazing things. But then they get to the call and they weren't connecting with the audience on the call. And I truly believe that they actually connected with the audience on the call, anticipating their questions, really laying out a good plan, and also answering the Q&A really well. So I thought it was a great call.
Hans, your turn.
Yeah, I would agree with all of that. The things that stood out to me, that there were several things that I was kind of expecting coming in that Tesla didn't do what I was expecting, but maybe it's actually something that's better. So my predictions weren't necessarily correct, but I feel like what they answered was really, really positive for the company, in a couple of different areas. One of them was that I was, with Elon going into wartime CEO mode, I was somewhat nervous that we were going to have a flashback to earnings calls in 2018 where he just gets fed up with people's questions. He's like, go to YouTube. And I feel like they did a very good job of actually really hearing the questions, other than, Tony Sakanagi, I think it was, that he was like, nah, we already answered your question. If you want to waste it, we're just going to skip over you. But other than that, yeah, they were very, very accommodating. They really did such a good job, like Jeff said, of laying out not only where we are, how we got here, what went wrong, how we're going to fix those issues, but then really going into detail on how we get from here to the next generation vehicle with the unbox process, what vehicles are going to go onto those. And, there's so much uncertainty around how many vehicles are we going to get. And there's still some uncertainty, but now we know it's multiple vehicles that they're going to be producing before we even get to unboxed, that there's multiple new vehicles that are coming before that point in time. And then, it's kind of sky's the limit once we do fully unboxed, fully robo-taxi production. And the big question in people's mind was, are we delaying consumer vehicles so that we can push hard into the robo-taxi market? And people are just uncomfortable with that idea. And Tesla completely put that to bed. They said, no, we're accelerating more consumer vehicles sooner. And the robo-taxi, we're very focused on it, but it's actually behind this next push into more consumer vehicles sooner. And so I feel like that was a great thing for investor sentiment. It definitely helps me to feel a little bit more comfortable. One of the things that I've been concerned about that, you've talked about, Jeff, is just if we're going to an unbox model where you do have these new, new component sets for the 48 volt architecture and the the 48 volt architecture and the steer by wire architecture, that there's a lot of new components there. And ramping up that whole supply chain to try and hit the ground running with a vehicle platform that they were thinking is going to sell in the million, probably 4 to 5 million units a year. Like, going from 0 to 4 to 5 million units a year that quickly really was concerning, especially, it was exciting to see, okay, they're going to start that in the Cybertruck. So that gives them a little bit of a head start. But if we're only at 250,000 vehicles a year when they want to start producing this next generation vehicle that needs to go to 5, that's a big gap. And so by pulling in a bunch of those components into vehicles that we're going to be, transitioning over, and it's going to be much smoother. And the first near-term target is 3 million units of production, at least that run rate at the end of 2025. Depending on what percentage of the global mix you are using to ramp those new components, you can really smoothly transition from whatever you were using into whatever we want to use in the future. And I think that is just strong, a much better strategy. And that was one of the things that you highlighted on the call, Jeff, that, I really appreciated. That, we've got all those steps in the ladder now. Instead of trying to go 12 feet up the ladder with 0 steps, we've got step 1, step 2, step 3, step 4, all the way there. And so that definitely helps me to feel a little bit more comfortable with not running into unforeseen issues in the next couple of years. But then all of the really exciting news on the call for me as a long-term investor was seeing the progress that we've got on the big things, which are going to be robo-taxis and Optimus bots. So for them to install the amount of compute in the last quarter that they installed, that means that the the version 12 software that is in customers' hands right now was developed before Elon said we are now not compute constrained. So right now, we are seeing slower progress with version 12 software than we're about to see in the next 3 to 6 months, sometime in there. And so that means, and like, I'm already just flabbergasted by how fast version 12 software is progressing today. And to know that we're actually going to be moving even quicker here in the very near future, and that, version 12.3 or 4 and 5, according to Elon, are big step changes each one. That is huge for the implications of how fast, like, we could have a radically better system by the end of this year than we have today. And a lot of people are just not pricing that in. And, I don't know what the full monetization strategy looks like from here to robo-taxis. All I know is we've got software is getting more and more valuable literally every single week. And it's just a matter of time before that turns into cash on the balance sheet. And then all of that just plays into Optimus, which we know is coming soon. Potential deliveries to customers in 2025 is way sooner than the vast majority of anyone expects.
Yeah. Yeah, no, it's pretty insane. I think both you and Jeff really brought up some good points. You too, Joe. But like I think, what I honestly wasn't expecting this like this good of a call just because of, to be honest, like I think Jeff, you said it the right way. I mean, Tesla's grinding 89 days out of the quarter, and then they have to step off the gas, literally, step off the pedal for one day and go do this earnings call. But I think that, obviously with some of the overall macro stuff that's facing the electric vehicle industry right now, they knew or they saw that this was coming down the road and that they need to step on the pedal when it comes to talking about AI, robotics, FSD. And so I think they planned this all at the right time, whether they were making those chess moves to do that or, the writing on the wall was like, hey, we need to really be pushing this. But they did it at the right time towards the end of Q1 and then really leading into the earnings call. And I thought that, as we all said, that they knocked it out of the park. Tesla earnings calls are always, it's a hit or miss. Sometimes it depends on the mood of the call, the mood of the questions, but this one was, very calm, composed. They gave a lot of insights into the future, but really, again, continue to hammer home that, hey, we're a software first-based company. Again, as you said, Hans, the amount of compute that they installed in the past quarter is pretty insane. I mean, how much FSD is going to get better in the next year versus the cumulative amount in the previous quarters is going to be insane. So I think they talked a lot about, again, FSD, the robotics. They also talked a lot about the next gen cars. They know that they were very clear, like, hey, we're in between two growth periods. They even said that in the statement. We're in between the Model 3, Model Y, crazy ramp between the next, vehicles that are going to be launched in the next year or so, right? So I think that they called it what it was, and they gave, in my opinion, a lot of comfort to investors about like, hey, this is our focus, this is what we're doing. And probably not even investors. I mean, you could say investors, but probably, again, mainly just Wall Street analysts, because I think a lot of, all four of us, we follow this company. We already knew that they were an AI robotics company, full self-driving autonomy. That's like all within their wheelhouse, but it's just not something that I think that they were taking time to really like get on the table and say, we are this. So I thought, yeah. So I think the things that stuck out to me were, again, how I think, I don't want to say focused that Elon was, but in my opinion, just, I think they needed an answer, and he stepped up to that call and really just was like, hey, I run the show here. This is what's going on. This is what we're doing. I'm laser focused. So I think he stepped up to that. So I think it was just, the nature of the call, one. Two, I think going into, the fact that they're pulling up their vehicles, we knew that they were going to be doing this, and that Elon had said in previous calls that, hey, I'm meeting with the production team weekly in Texas, and we're going over, the production plan and manufacturing. Like he's called that out. So I think that was super helpful. And I think, again, throughout the whole deck, what was their focus? It was just, hey, we're a software company. And I don't know, I personally felt like that really came off the paper. Like I didn't even get to the earnings call yet. And when we were sitting on X Spaces, I think it was like with Sawyer and Holmars and Stock Talk and, several other people. It was like, I looked at that. I was like, this is like, you start reading the text in each, one of those major sections, and you're like, dang, they're like, they're answering my questions without me even having to get on this earnings call. So that's why I was really pumped after it. Even if the stock had tanked another 15%, I walked away knowing like, hey, I got my questions answered. We again know who's running the show. And I think that it really starts to make sense too, why they did these layoffs, why people left the company is, one, they're going to a new phase of the company, right? It's like the people that brought the company to where it was versus where they're headed is like two different groups of people. And that's a natural phase that happens with public companies. I've seen that at the companies that I've been a part of in tech. It just happens. And also too, if you're going from being, hardware to software, a lot of the tech companies are doing this right now. They're getting rid of potentially extra fat and then moving it over to the AI space or the compute space. And so that's what you're seeing happen as they, continue to trim the fat. They're not growing as fast as they thought they were going to, just because of some of the headwinds. And so what are they doing? They're trimming the fat and saying, we don't need as many people in these certain spaces. We're going to potentially cut certain things down and then, maybe hire over here. So I don't know. That's what I got from it. Hans, I don't know if you had a follow-up. Oh, you had.
One of the things that I was gonna highlight here, if you want to bring up, I've shared my screen. One of the implications, looking into the deck itself was I pulled the chart off of the deck for the miles driven by FSD and the acceleration. Right now we're in the period still, it's about to end, of the free 1 month trial. And so they're collecting way more miles of FSD data than they were in the past. Right now, it's over 10 million miles every single day of FSD data. And at that run rate, we will have, it's like 3.6 billion miles per year. We had collected less than a billion total miles on FSD V11. And so in a matter of months, we can collect more data for FSD V12 to train on than we have collected in the entire history of the company up to this point. And that 10 million miles a day rate may dip down a little bit after this trial is ended, but I have heard anecdotally that a lot of people at that $99 a month are subscribing, and so we may be able to maintain even still a pretty healthy, reasonable rate. But whether it's 6 million miles a day or 10 million, either way, both of those rates still get us to well over the amount of data that we've collected in the entire history of the company up to this point by the end of the year. And that just means that, like we said, that combined with the amount of compute we have means that we have the ability to continue to improve the quality of the software at a rate that we've never seen before. And so, those are just a couple of the data points that I'm using to base the conclusion that FSD V12 is like, this is just the beginning of the rocket ship, that full end-to-end neural nets in the car, really what that means for Tesla.
I was wondering what you guys thought about with the projections that they set for the new vehicles and things like that. What do you guys think is going to happen with the Juniper? Like, I mean, like, they wouldn't refresh that, right? Like, right while they are trying to work on all this other stuff, because we know, like, Tesla likes to focus on things, and so, like, while they're focused on this, they're probably not gonna change over the Model Y front fascia to like the new Model 3 refresh or anything like that, right? They're gonna like just keep going balls to the wall until it wears itself out, like the Model S and X, I guess.
I think it depends how far along they were on it, and could they just use most of what they did on that for the newer vehicles they talked about. So could they take the ID changes, the industrial design changes from the outside, and then just, and then take the modules they plan to pull forward from the unboxed and then marry the two together? So it may delay it. Or again, if it's already done and it's kind of in this final preparation for mass production phase, they may just let it go, and then they may just do a changeover, later on. I kind of looking from the outside looking in, I would like to make sure that Tesla doesn't just explode the number of models. I don't think they're going to do that. Because they have a huge supply chain leverage efficiency, because not only are they building more EVs than anybody in the world, they're dividing that total manufacturing into like 5 major models. whereas BYD, which is very close to Tesla's production, is dividing it into about 21 different models. So you actually have different leverage per part number. It's meaningfully different. It's meaningfully lower. They offset it a bit because they have their own components business. But long story short, I think to answer your question, it depends how far along that Juniper version is. If it's like ready to go in mass production, they may just let it go. If it's not, they'll pause it. They'll probably use a lot of what they did in it and then pull these modules forward and put them in. These modules for Unboxed had to start ramping depending on which module they are and at which stage and tier they are in the supply chain. Some of them had to have started if they were going to ramp the vehicle in the middle part of next year, then a lot of these modules would have had to have started ramping, at the end of this year or early part of the following year. So I think they're going to meet those modules with some minor modifications on the 3 and Y, and that's what these vehicles will be. But
Yeah,
they'll be lower cost.
I was really skeptical that they were going to bring the Juniper update to the Y anytime before, mid to late 2025, potentially even later. But with the commentary that we got on this call, I may actually change that opinion and think that it's more likely that we get a Juniper refresh sooner than before. So, because if you're making changes to the line, making a couple extra, it might slow you down a little bit. But if you're already doing a lot of modifications, then I think you'd really just have to look at the numbers, and Tesla will be the only ones that really have a full picture of the impact that will have. But I think it definitely increases the likelihood that we'll get it sooner rather than later. And one of the things that, while we may not be manufacturing them in an unboxed process, if we begin to manufacture Model 3s with front and rear gigacastings, and we do shorter battery packs in between them, like we can get 2-door versions of the 3 and the Y that now come down in size to compete with smaller vehicles. And I think it's very reasonable that you could have a sub $30,000 Model 3 hatch coupe that is an incredible, especially if you start selling it as the performance model. And that one would probably sell for significantly more than that $30,000. But can you imagine a Model 3 performance hatch coupe? That thing would be insane. And I think it probably would be a great vehicle to begin the ramp of that smaller form factor with. So, I think we've got that opportunity. Obviously there's plans for a van at some point. We don't know if that falls before or after Unboxed. But there's a lot of opportunities now that Tesla has to diversify the vehicle offerings without necessarily, like, you can still have a lot of common parts between, those smaller 2-door versions of the 3 and Y and the existing 3 and Y platform, and maintain a lot of the advantages that Jeff has spoken about. And I think it's also just an easy, like, give me, as far as the segments that Tesla's not really playing in currently, that it's not that far from where they are today to get there.
Yeah, no, it is really interesting to see, because imagine they were working on a low cost vehicle 2-3 years ago. I mean, it would have been, and I mean, obviously they had alluded to, and they delivered on it. The Model 3 being 35,000, but now, I mean, you have a well-ridden bike now. I was gonna see well-oiled machine, but like you have a well-ridden bike. It's broken in. The mitt is broken in. And now it's really coming down to, I mean, especially now with the Cybertruck. I mean, I hate to say this, but it's like if you can build a Cybertruck, I mean, you probably can build, a CyberCab or something else. I mean, I think the Cybertruck in itself was probably the hardest vehicle probably to ever make or literally build a production line for. So maybe not. I don't know. Maybe not. But I feel like this is obviously it's going to be this next gen platform. These next vehicles are really going to continue to push them to the limits. But you're building off of a already very strong team that has built 2 or 3 really solid production lines, obviously with the 3, the Y, Model S, X, and then the Cybertruck now. So, but yeah, I think the other thing I wanted to state, I don't know, did this surprise you when they said that they were at 1,000 Cybertrucks a week now that they are producing? Was that quicker than expected, or was that a little bit or were you expecting it actually to be further along?
For me, Jeff probably will have a different opinion, but I think as just an outside perspective, it seemed to kind of line up. I mean, even at this point, I think they're moving faster than some productions that they did. Because I remember like back in the day with the Model S and even with the Model X, I mean, those took a while to ramp up to 1,000 and 2,000. But I'm actually it lines up for me.
I think it's a really difficult vehicle to build. I think they're obviously solving problems within their supply base, within their factory to keep like getting through these barriers. And it looks like they hired a second shift. At least they put the Rex out a couple months ago. So, my estimates for them, I think they get somewhere, in the 60 to 80K range, for the year in terms of units. So they got to keep going, obviously, in terms of getting their capacity up. But I think Tesla probably had a plan to be a little bit faster than this, but it's not awful. And again, I think in the first quarter of launch, a controlled introduction, and companies do this on purpose, by the way, too. Whereas you don't want to be, you don't want to be running faster than your headlights. So you put all this product out in the field and you're not getting the feedback. And that feedback loop from the time you ship to the time you get your first field returns is very important. It's a race against time. And the more product you have out in the field, the less product you have to correct in the future and make better. So it's actually really good that they had a controlled introduction. I know it sounds like, making everything sound good. I think they're behind where they wanted to be from a rate perspective, but I actually also think it's good from from a quality perspective, a controlled introduction perspective. So when you have this issue with the pedal, you're going and fixing 3,800 cars versus 40,000 cars. And so now, though, I think they really need to get, they need to hit the accelerator and they need to get really need to get moving. They need to get my car. To me, that's probably the number one priority.
Yeah,
that's number one.
Yeah, exactly. And then you'll have to take the call like Joe is from the car.
I will take the call. I will take one from the. I'm looking forward to it. I know Tesla's working hard.
Yeah. I think. Or sorry, Hans, were you gonna say something?
Not on the. Yeah, I would say that I'm relatively pleased with the state of the ramp. Remember that 1,000 a week was a peak rate. They hit 1,000 in one specific week. I don't think that means the entire supply chain is able to keep up with 1,000. Like the batteries are ahead of 1,000 per week, but there's something else in the supply chain that's not really at that rate at this point in time. And so, they can kind of build up some inventory. They can then, for this week, we're going to go ahead and go all out and see how many we can produce. And they did reach that 1,000 number. And so they, that's kind of a stress test to find what are the next set of challenges that we're going to run into so that they can begin solving those. So all of those things are good. We're definitely not at 1,000 a week average as far as I can tell at this point in time. So yeah, we need to get to that point soon. And then we need to continue to build from there. I'd love to see by the end of the year, us exiting at 3,000 units a week or more on average, not at peak. And in order for that to be the case, they'll probably need to be telling us that they're able to reach something like a 4,000 or 5,000 a week peak rate. But like Jeff said, it's good for them to be a little bit more controlled early on. I do think this was. I don't think this is going to be the most difficult car to build once they have it all figured out. I do think it is so much different than anything else that's out there today that it does have a whole set of new challenges. And that's the part that makes it difficult. But once they reach volume production, I don't know that it's going to necessarily be a more difficult vehicle to produce than, say, a Model X. In fact, I would say the Model X was probably more difficult to produce in a lot of ways. So it's just a matter of getting from here to there. And I am excited to see, because a lot of the processes that they're using, I think will go over obviously to the CyberCab. And so I'm excited to see what the design of the CyberCab looks like. I'm hoping that maybe the Robotaxi 8.8 unveil, we get to see what Franz's vision for that CyberCab looks like. And that's going to be awesome because I think that they can use some of the same design language from the Cybertruck and make it significantly easier to produce than the Cybertruck is, and still have some of those striking features and lines and angles, make it really cool and futuristic looking, and at the same time make it definitely easier on the factory people to produce in large scale.
Well, I mean, it's not going to have to be bulletproof, right? So you could probably end up with easier shapes that you can probably stamp and stuff like that, even though it still will be a cyber cab. There's different things you can do because you don't need it to be as thick of a stainless steel. You don't need it to be what the Cybertruck is in that regard, I would think.
Precisely.
I'm going to request
speaking
that
of-
that the CyberCab for Chicago is bulletproof. Like there's a bulletproof edition.
Yeah, you'll have to upgrade that. But I think so. Something obviously, Hans, you broke open the beer on this one. So, the Robotaxi, obviously, they even had a whole slide on this, like a preview of the actual Tesla app with the ride-hailing experience. But what was your thoughts on this? And even when Elon started using the word CyberCab, I mean, what do you think? What did you think of this during the earnings call? And what are the implications for Tesla? For this, I mean, even Elon. Correct me if I'm wrong, guys. I think he used the word. It's like it's in between like an Airbnb and an Uber altogether, which just your mind starts just like my head would just pop off literally, just thinking what this company is capable of doing. And we had been talking about this for years, but who wants to give their just like impressions on hearing about the Robotaxi and the CyberCab and the ride hailing app experience? Jeff, or
you just got to pick someone. I'll go.
All right, yeah,
I
go
think
for it.
so they have an iterative approach, which is great to see. I believe that they will. You will be able to use the Tesla app, soon. At some point this year, to actually to be able to give rides, and I think that's what they're showing, where you could take your car on FSD and with a driver in it, and you could actually support rides. And I think they want to get the network going, get people familiar with using the app, with discoverability, and I think it may start that way. Tesla's going to unveil kind of their vision for what this looks like. I think having a CyberCab is going to be an interesting, futuristic looking vehicle. I think it's going to be highly functional. And I think from a cost perspective, its unique look is actually going to be function first and then form. They're going to have to solve for function from a cost perspective to get this to a certain price point. And this is where a lot of the other robo-taxis are, to me, just off the reservation. If you look at the cost structure to by the way, all the robo-taxis you see out today are remanufactured. Most of them, if not all of them. The ones you see in the US are all remanufactured. And when you take something that's manufactured and then you have to tear it down and then you have to remanufacture the sensors, you can just, I mean, the cog structure is it's a challenge for anybody that has to do that. And so Tesla is going to have this purpose built. They already have the lowest cog structure. Cogs is cost of goods sold. So the cost of the components and the cost of putting it together and getting it to its final destination is what's in cogs, basically, as well as the warranty side of it. They already have the lowest cogs approach to autonomy today. Like that's what's in the 6 million vehicles running around. And now they're going to take that, probably going to cost reduce it again, and they're going to put in this CyberCab. So when I hear CyberCab, I think function, but very cool looking form, built for cost, designed to hit a certain price point. I think Tesla, again, de-risked it, launching these vehicles in between where we are today. Where we are today is we build a 3 and a Y globally, somewhere between $29,000 to probably $33,000 in COGS today, somewhere in that area. And what you would need to do to comfortably and profitably ship a $25,000 vehicle is probably target somewhere between $17,000 to $18,000 in COGS. So just over half of that. And so if they can come out with this vehicle between now and then, and it's somewhere in between, maybe the COGS are, in the 25 to 29K range, you're meaningfully de-risking their path to the 17 to 18K range. Taking that one big jump would have been a huge risk, and it would not have happened in year one because all of those new modules would have to ramp. They would all have to get to their own peak velocity, their own peak yield. And when you're running below peak velocity and yield. So anyway, I'm giving a very long answer to a very short question. You asked what's going on with what I think of the app, what I think of the whole robotaxi experience. I think they're going to unveil it on 8/8. I think they're showing you glimpses of the app. I think they're going to iterate their way through it. It's not going to be this big bang effect. And I think the CyberCab is going to be function over form, but a very cool form.
Yeah, I can see that. Gally had a video where he talked about he took a ride and the tech that gave them the ride was using that app and summon the vehicle. The way he summoned the vehicle was using that app, and this is like 2 years ago. So you can just imagine like what they've been working on and what they released to us is a lot more. I mean, they're a lot more further along than we probably even shudder to think, because I mean, hell, just like last year, people were like scoffing at the idea that there's no way they get rid of LiDAR. There's no way these cars are not going to run on cameras only. And then we look at V12 on hardware 3 and it's like, holy cow. Like, yeah, it works.
Hans, you want to throw in?
Yeah, this is one of the areas where I've made some predictions that we'll have to see if they come to be true or not. But I would say long term, I have concerns about Tesla monopolizing the profits from robotaxis. Not because, like, I think that they can provide an exceptional experience. I don't have any reservations about their ability to execute on the roadmap, but I don't want to see Tesla put Uber out of business and, this company and that company and that company, because I think that puts a lot of extra scrutiny on them. I would much rather see them long-term evolve into a platform for other people to be able to deliver EV powered autonomous taxi services. And so right now, like it makes 100% sense to me that they will do a completely vertically integrated service in the beginning of this new era of robotaxis, because they want to be able to control the experience from end to end so that they can figure out every single piece of the process, every single part of the tech. They can have that full feedback loop. But I'm hoping that, long term, that this is something that ends up, maybe we're selling tons of these vehicles to Uber as well. Cause that's not one of the, when Elon talked about it on the call, it was these are going to be either owned by Tesla, or they're going to be consumer vehicles that get given to the Tesla network, and it's all about the Tesla network itself. I'm hoping that we see something over time evolve that looks like what they're doing with supercharging, where the Ford app works with the Tesla superchargers, and the GM app works with Tesla superchargers, and that I'd like to see the Uber app also have Tesla CyberCabs available on their network, and we'll just have to see how all of that kind of plays out. I think that, that makes sense to me in the long term, but I don't know what the path from here to there looks like specifically. And maybe I'm wrong to be concerned about that. But I just really don't want to be in the position that Microsoft was in the 1990s with antitrust regulation and scrutiny.
There would be a logical reason for them to partner, and that would be to shave down the peaks that they both experience. If you shave down the peaks, you can lower the cost to serve to the consumer. So this surge pricing, what you see with Uber, it's kind of off-putting, and it makes a lot of people don't even want to take them, during those time periods unless they're forced to. So they could help each other from a load sharing perspective, and it could be a win-win from a cost structure to do that. So I could see them actually doing that together. And there's information from Uber that Tesla would want too, by the way. Sorry, go ahead, Joe.
No, I think you're right on. And I don't think you have to really worry about that, Hans, because as we see with electric vehicles, no matter what Tesla does, they're highly scrutinized and nobody goes all in. You know what I mean? So even if Tesla did this, I don't think they would not monopolize anything, because I think people would not choose them just for the sake of them being Tesla, and they just don't want to be associated with Tesla. I know people like that now that even though Tesla's a better buy, they went and bought a BZ4X. You know what I'm saying? Like it wouldn't even, it doesn't make a matter to certain people. And I think, so I don't think you really have to worry about that so much. And then like Jeff says, like, it's in Tesla's best interest to partner with people and to help offset those load times because it gets really expensive. I was in Vegas and I happened to be hailing a Uber at a time when it was like crazy expensive, and I was like, whoa.
Yeah. Comment to Hans. I think even if let's say they launched Robo, like even if they launched, let's say they didn't even actually have autonomy yet, but they launched their version of the Uber app. You could be a Tesla owner and being hey, I want to be an Uber driver on the Tesla app, and like they launched that whole thing. I think it would just become another app that is used for ride hailing, like an Uber or Lyft. One, there's still a huge uphill battle to electrify America, electrify the world. And so I think it would just become one of those things where it would just become another option, kind of like the supercharger network right now. Sure, it's like they are allowing other EVs to come on it, but they are one of several charging options. Sure, they're the best. So I think it's going to be, that's my opinion of it. I don't know if they would ever, to be honest, I think it would just be, they would be fully vertically integrated for the whole experience, but I don't know if they would actually be able to overtake it, because that means everyone would have to buy a Tesla, unless they open it up, which is, I think at some point they probably would, right? I mean, like, but it depends. It might be, maybe you only have to have an EV to do it. Because I don't see them doing it for gas cars, right? But I think that's going to be a bit of way out, especially given all of the current headwinds that we're facing right now. But I think it's like, for me, especially in the Bay Area, and I know a ton of Uber drivers who drive Teslas. So I think they're going to be bigger markets than others, right? So you turn it on in Austin and like probably all the big metropolitan areas like Dallas, Los Angeles, maybe even Miami and New York. But that's, it would be insane if they churned something like that on now and just said, hey, if you're an Uber driver today, go ahead, turn it on. But it might become one of those things where you have Uber, Lyft, Tesla app opened, and then whichever one you get called, that'll be what you end up going with. So, because right now I know so many people who drive and they're using both apps, Lyft and Uber. Uber always gives them more rides. That's always the feedback. So and Lyft is not as in it's not in as many markets as well. So yeah. Jeff, oh sorry,
I was just going to say, by Tesla openly licensing FSD, they've opened the door for other companies to create a robotaxi if they want to create a robotaxi. And but yeah, it's an appropriate thing. I think Tesla is looking out for these concerns, but it's appropriate to always kind of be looking over your shoulder, like, okay, when, could this become a problem in the future? But I think the path to licensing FSD and that being open and openly offered to partners, I mean, they have the opportunity to acquire the technology.
And it's obviously a good problem to have as well. Like if that ends up being something that we're contending with, well, we have certainly won in a large way as, as a company, and then as investors in the company as well. I definitely have faith in the management of the company to think about those things in an intelligent way as well. So it's just, thinking long term into the future, how's the story going to play out? It's one of those things that it's an open question, but it is so far in the future that it's not pressing that it hasn't been answered yet.
Yeah, and what if Tesla builds up, and this is kind of out there, but it's kind of interesting thinking, so what if Tesla has this consumer model of selling vehicles? You need the cash up front, you either finance it or lease it. Tesla needs to get paid. But as Tesla is doing this and they grow to the 3 million units and they start getting all this autonomy revenue, and they just build up this, kind of gigantic cash position. What if the robo taxis are not sold, at an MSRP? They're sold at a cost per mile, and you literally they roll out, they drive out, and you could buy them at a cost, basically at a cost per mile versus, where Tesla's obviously making a profit immediately. But anyway, the whole paradigm could change with this. It's gonna be interesting to watch.
Yeah, it's I think it is truly impressive that Tesla is able to compete in so many spaces with the ecosystem that they have built. I mean, shout out to again Joe for just putting this deck together. But here they laid out their whole ecosystem. I mean, from the humanoid to energy and storage to electric vehicles to ride hailing to battery cells. I mean, this is full vertical integration, but impacting in so many different industries, which is just crazy. Because you have solar and energy, obviously, you have automotive, you have AI, robotics, ride hailing. I mean, just it's endless what's possible with this ecosystem. And at the end of the day, there's no, like, I don't see many product ecosystems like this. Typically it's like,
Yep.
a subservice of one of these, right? Like Uber is just like one of these pictures, right? Airbnb or even Boston Dynamics is, 2 or 3 of these, right? To be able to have the full stack like this is pretty, just pretty crazy. And then one of the other things that they quietly released too was the Model 3 Performance. And I thought the specs on it, I thought they did a really good job with the look of it, the specs on it. I would have loved to see over 300 miles, but all good there. But they literally quietly released that. I think it was the day of earnings. So yeah, it was interesting. And then obviously always the sleeping giant. Tesla Energy, which I checked, it grew 7%. So with the other businesses declining, this is still growing. But I don't know if any of you have any like closing thoughts on the energy business and potentially even expectations on this, because I think that this is not talked about enough, but at the same time, could be the sleeping giant, as we all know.
Well, as a Cybertruck owner and somebody who lives next to the mega factory, I I see a lot of trucks. Just, I mean, that whole area, and I'll take a picture and upload this to X later on. But like that whole area is massive, man, and they have so many battery packs just like stacked out. It's overwhelming to see like what they're doing on a daily basis, and yeah, you're right. It's not talked about enough, but yeah, it's coming, and it's coming with a force. Go ahead, Jeff.
No, I think you covered it. I think, it's a lumpy thing to kind of project, but the gross margins are going up. They're filling up that factory. They're starting construction on Shanghai, and energy is going to be, if you look at successive bottlenecks to sustainable energy over the next several years, in AI, quite frankly, and energy is a bottleneck. Um, so I think they're on the right path, the right trajectory, and this is going to be, from a growth perspective, this is growing, leaps and bounds, and I love where the gross margins are, and that can continue to move up. This is going to be it is a fabulous business for Tesla, and it will be even greater here over the next couple of years.
And yeah, they did say on the call that, the slowness in the ramp of Lathrop is really just a function of how long it takes for, once a project gets planned, for it to be operational. And so it's just like we're seeing now revenue that was really generated several years ago, and they're building out their capacity at Lathrop to meet the run rate of packs that can be interconnected today, not the ones that they have orders for. But it's going to take, so there's just such a large amount of red tape that it takes to get these things connected. You got to realize the fact that the customers for these are utilities, and utilities are the biggest, most bureaucratic and slowest, almost in a lot of ways, most non-functional
Yeah.
organizations that exist. And so that is the thing that is slowing this down, and not necessarily the quality of the technology or the opportunity that's at hand. Um, and so unless you have kind of extraordinary circumstances like Australia, there's not that many utilities that were highly motivated several years ago enough to make these orders to where we would have deliveries today that would really, be quickly ramping. I'm very curious to see how that shapes up in Shanghai. That the regulatory environment in China is, 100% different than what we have here, especially when it comes to energy. And so it may be that we end up seeing revenue for the energy business accelerate way, way faster in China than it is here in the United States, to where they could be, at higher level of revenue coming out of that factory 12 months from now, even than we have coming out of Lathrop today. Or, maybe it's 18 months, maybe it's 24 months. And I don't know that that's going to be the case. This is something that I've asked this question a number of times, and I haven't yet found anyone who knows. But I think it's entirely possible that they'll be able to basically roll these things off the line and deliver them and get them interconnected into the grid, and immediately be able to recognize revenue off of them in very short order. I would be kind of surprised if we don't see something like that in China.
With the solar attached to them, you mean, and all that, like just ready to go?
Whether it's with or without solar, I mean, there's lots of different use cases for them. That's obviously a big one. And, China has huge supply of very affordable solar PV cells. So if they want to build up their renewable sources, they're all obviously also doing lots of nuclear as well. But, nuclear is great for baseload generation, and then having renewable solar plus batteries is great for handling the variation in your energy demand. And so I think that, it's a great product. And then that's just in China. There's, going to be lots of demand for these in other jurisdictions as well. But China, I think, is going to be the place where the process from getting out of the factory and operating is probably going to be the quickest turnaround.
Yeah, it's it'll be awesome to see, you know, what they do with the energy businesses. It's been you know, I think it's a big necessity in general, I think, just for the economy to run. I mean, or more importantly, for you to just power your house. I mean, and it's the better route to go. I mean, something that's so free, right? Like the sun is free. Why not store it? And so yeah, it'd be exciting. Something to just two things to take note of. If you are a shareholder, please make sure you register your votes to vote. Register your shares to vote so you can whatever you end up deciding on voting, it's important to make sure your voice is heard. I personally would say that this is one of the most important votes because what this company is going to be doing over the next 3 to 5 years, I think it needs no better person to be running the company than Elon, even if it is half-baked Elon, you know, quarter Elon, whatever it is. It's, you know, Elon needs to be at the helm, and I think you would be doing a disservice voting a certain way. I think you need to be voting yes on this comp plan. As Alexandra would say, a deal is a deal. We all voted this on 2018. None of even the stuff that they've shared would have changed my vote. So I think it's important to go ahead and get, you know, make sure your voice is heard. And then lastly, if you are available, come to the X Takeover at xtakeover.com, July 27th through the 28th. We have Franz von Holzenhausen along with Jared Isaacman as our keynote speaker, and a lot of other influencers in the Tesla and SpaceX space coming to speak on panels. We would love to have you. So if you are free on July 27th through the 28th in San Luis Obispo, please come. And we look forward to potentially seeing you there. Outside of that, thank you again to Jeff, Hans, and Joe for being here each week. And we will see you all next week. Have a great week, everyone.